From the morning reading, VIX spikes as Brixet Eve on Spider Qs and IWM drifts slightly lower. Adobe gaps down after earnings. 3 of 9 sectors moved higher on Wednesday. XLV, XLB, and XLP were the strongest sectors, while XLE was the weakest sector. Oil futures oil futures fell $1.20 to close at 49 even. Breath weakened as decliners led 1753 to 1234 in the New York Stock Exchange and led 1507 to 1022 on the Nasdaq. On the S&P 500 snapshot, a bit of selling before the Brixet vote. European equity indices finished today's session mostly in the green ahead of tomorrow's big Brixet vote. The FTSE gained 0.56%, the DAX 0.55%, and the CAC 0.29%. The benchmark S&P 500 rose during the morning to its 0.52% intraday high, comparable to the FTSE close, but then it sold off in a couple of waves to its negative 0.22% intraday low moments before the close at a negative 0.17%. So far this week, the 21 level has served as resistance. As for the Brixet vote drama, there's still another day of trading before we know the outcome. The 10-year note closed at 1.69%, down 2 basis points from the previous sessions. Stocks have been going up and then selling off as the day progresses. When markets open strong and close weak, it's said to be bear market behavior, which makes sense, but it's not true. Even if it was, it wouldn't apply now, as 2016 has seen one of the fewest numbers of weak days in more than 30 years. Short-term uncertainty is nearing a record high. Traders are pricing in the likelihood of a major short-term swing in the coming days due to the UK vote, and the premium of short-term uncertainty has reached a level that coincided with market lows each time it occurred in the past 5 years. Money is leaving a popular silver ETF. The SLV fund has lost $168 million in assets over the past week, the most since the spring of 2013. Commodity funds don't act like equity funds and don't respond as consistently to extremes in fund flows. In a general sense, when XLV has rallied and money leaves the fund, it has tended to lead to lower prices, but we can't consider this to be more than a minor negative. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:36 a.m. Mountain Time, and I'm recording this in preparation for the market day of June the 23rd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And here we go. And pretty good action in the overnight. At the time of this cut, the S&P futures were up about 18 points, or heading towards 1%. Russell futures were up very robust, up nearly 1.5%. NASDAQ futures up nearly 1%. Dow futures up about 0.75%. Crude oil also up sharply, up about 1.5%. Euro up about 0.2%. Bonds down about 0.2%, and gold down about 0.33%. In overseas action, China was the only one that was down about 0.5%. Hong Kong up about 0.33%. Japan up over 1%. Germany up about 1.75%, and United Kingdom up about 1.00%. In terms of major macroeconomic reports for the United States today, you have the weekly unemployment claims. Obviously, this isn't the United States, but it will have an impact on us. You have that EU membership vote, the Brexit vote that is going on, though we won't likely know the outcome to that until after our market closes. So it'll be Friday, which you'll get up and probably see the impact. Now, obviously, there's all kinds of polling, exit polls, and so forth. And it would seem, based on what's been happening in the market, that those polling and betting odds that they use in Great Britain are, running in favor of remaining with the European Union. And if that's true, then the market will probably be a positive. Now, that being said, there's a lot of premium that's being priced in to the potential of a vote to leave and a market drop. So if we were to get a surprise to come out of this election, that could really catch a lot of people on the wrong side, as we've had this high premium and yet the market's already pricing in an outcome. So that would be the surprise, and things would be really turning quickly. In terms of Friday and looking ahead for the United States, core durable goods and University of Michigan consumer sentiment. So that's what you got on the slate. Actually, in this case, it's mostly about a non-U.S. outcome that will likely be driving market behavior. In terms of current volatility, as you would expect, it's been increasing. There's quite a volatility spike. Look at the short-term VIX, almost a 28. Skew also in full-fledged warning status at over a 135. IV percentiles have been climbing. You see the S&P at a 35 now, the Russell at a 38, NASDAQ 29, Dow at a 32. On a close-to-close basis, there have been no standard deviation moves put in on recent trading sessions. And really, you have to go back 8 trading sessions, back really to the 9th, before you get a standard deviation move. Though, if you look here, all the standard deviation moves in the last 10 trading sessions have been negative sessions. So we've not had much in the way of big, robust moves up, though we have been coming up off of the bottom. We can go ahead and go to the charts and take a look at that. And here's the S&P, and we've been approaching again with the overnight. This is the overnight candle here. This is not a daily candle in terms of the cash market participants' participation yet. But look at this. We're back heading up against the former area of resistance once again, starting at about the 2100 area and going up to about 2134. We did do a little bit of a head fake into that area a couple weeks ago just to fail and come back down to the top of the cloud. And here we are back again on the eve of the Brexit vote, poking our head up against this area of resistance once again. So it'll be very, very interesting to see if once the vote comes in, if it doesn't change the expected outcome, how much the bulls actually have left to be able to press up through this. Now, events like that can sometimes be the energy and momentum generator to give the bulls the energy to press up through major areas of resistance. So we're going to watch this one very carefully. We'd love to see this actually break through this area and give the bulls new life for a whole new leg of bullish action. That being said, the probabilities of that happening, it's hard to get terribly excited when you've had failure here so many times. And do we get the vote and then everybody says, well, that's what we thought was going to happen, and it basically just goes sideways once again, and nothing really comes of it other than we don't get a fall off, which would have been predicted if the Brexit vote had gone against. So a lot of just counter winds that are going back and forth, and we'll have to wait to see what the actual markets do. In terms of the Dow very much in the same place, though you start to see something here. Notice, here's our highs and major swing high that's lower. If this were to stall, this would be starting to form an interesting symmetrical triangle in the Dow, though since it was so strong going into the symmetrical triangle, you would still expect that at some point it would still push out to the bullish side. So we'll continue to watch this chart pattern formation on the Dow. In terms of the Russell's been putting in higher highs, higher lows in the primary swings of late. We'll continue to watch where that goes, with signals continue to signal, for the long side there. And the NASDAQ's been relatively weak, and kind of like the Dow, you could make a case that we're getting lower highs and higher lows, and maybe something of a symmetrical triangle starting to form there as well. In terms of crude oil, got back into the channel. We talked about this yesterday, and so far is holding in that channel, though you'd like to see a run towards the upper part of that channel. Gold, of course, has been coming off with the Brexit vote looking like it's going to vote to remain. So some of that risk-off behavior. Do keep in mind that the brokers have been pretty much universally announcing significant jackups and the margin requirements. So as you see these various moves start to come into play, that doesn't mean that we couldn't have some significant volatility in the next 48 hours, perhaps even through the weekend. If there were a vote to exit, the talk is that the British banks would close for a bank holiday on Friday, and that could also mean that the volatility could persist through the weekend. So just kind of keep all those things in mind. And let's take a look at the volatility. Volatility, of course, is spiked coming into this, but as the outcome appears to become more known, has been coming off. But you see, a couple sessions ago, it started to climb again. Again, there was some votes, some polling that came out that indicated that it was going to be very close. And that spiked another round of increases, but that seems to be coming off with last night's action. Okay, I think that's probably, we'll take a look at bonds. Bonds, of course, doing very much like gold, coming down, but also, let's keep in mind it's coming down off of a 52-week high. So bonds continue to be very strong, and this is going back probably to a story of the United States being stronger than other bond markets, and a lot of this is being pushed by the very, very low, even negative interest rates in some of these European economies and so forth. And so they're moving that money into U.S. bonds to get something of a return. Okay, let's go ahead and go to the daily report. And by and large, it's a very, very mixed set of signals here, and not surprising given that we're up against a kind of binary event. But the mechanical signals, what do they tell us? Well, the intermediate term phase opinion tells us phase 2, which is bullish, a trend reversal to the bull side. In the terms of the market timing signals, we follow 3. And the first one from IBD is an uptrend under pressure, which is in warning status. The second one, GMI index, is in a buy signal and has been since 525, but it's rather tenuous with a 3 out of 6 on the GMI index, and on GMI index 2, the more sensitive one, at a 4 out of 8. In terms of decision point scoreboards, the third mechanical market timing signal, you can see the short term, no changes from yesterday's session, but clearly the short term is very, very weak with a neutral to bearish stance. Intermediate term retains its universal bullish stance, but this is all against the backdrop of the long term, which is also decidedly mixed. In terms of position sizing opinions, the two models are still coming in at 50%. In terms of the intermediate term market posture, again, very mixed here. We do have a strong bull from our primary benchmark index, the S&P. It is up over 50. It is moving up. It gives us a strong bull signal. We're now 2-3 sessions into this new signal. The Dow also in a strong bull, but notice that the NASDAQ and Russell are both in intermediate term weak bears. And frankly, the NASDAQ just a little bit less reading, and it goes into a strong bear. So very, very mixed signals coming from the intermediate term market postures. Overall hedge warning status remains level 1. We probably could take the attitude of 1+ just because of this big binary event. You know, the market seems to be leading us with the confidence that this vote is going to have a benign outcome, and that many of these people who bought protection and did things like that, you know, are going to find themselves, you know, basically with a non-event and the market responds to the upside. In terms of the specific strategy opinions, the VIX is outside the acceptable window to initiate new positions for novice traders. Some very aggressive traders may find that these elevated premiums are something to nab and take advantage of. If you're in that camp, certainly keep in mind your position sizing, have the cash available to make the adjustments should this market turn down and you have larger than expected delta and vega moves. Be able to make those adjustments to keep yourself you know, in the long term winning side of the trade. In terms of cover calls and put selling, relatively bullish still, and the signals continue to show signs of firming up in the short term, very, very short term, as in the last session or two. And yet at the same time, this big binary event, very hard to initiate a brand new covered call and look to make, you know, 1 to 3% in the next month in front of such a binary event. Probably much better idea if you've got something hot on your watch list that's triggered an entry signal is to look for opportunities to sell puts or put spreads in a position size you're willing to own, especially if that market binary event should go against you. We still have a slew of these special warnings firing under the volatility bucket. You see market in decline, sharp increase warning, that VIX spike. You know, we had a spike. We're waiting for the re-entry signal. That has not come. We even got a little bit more of an increase in the VIX. VIX futures still up over 18. Do note this, though. The distribution day count has fallen below the warning status. So there's one for the bulls as a level of improvement. That skew, as we mentioned earlier, still elevated. Also, look at this. The pricing volatility move that's being priced in right now is very, very high compared to where we've been. 10-day out expected move now up over 70. So the markets are pricing in the potential for a very, very large move coming out of this Brixet vote. In terms of the intermarket risk aversion indicators, we've been watching this one very carefully. They're still all essentially mechanically in the risk off, but they're all 5 rolling up. And if we do have a positive outcome to the Brixet vote, these are all now close enough that we would likely see these all roll to risk on in very, very quick order. Some of them are literally right on the signal lines to be able to roll over to a risk on status. In terms of sentiment, everything's pretty much neutral for stocks, short and medium term. The fear and greed index is at a 57, so just above the neutral, perfect neutral kind of reading. In terms of bonds are at an 8, gold is at an 8, so they're somewhat elevated risk. So watch for those potential reversal patterns in those markets. And let's see here. Looks like I forgot to bring over the sector specific. And so we'll go ahead and just wrap this thing up. We're at 19 minutes, so I like to keep this under 20. I'll scroll through here. If you aren't signed up for the emails, you can go to this website right here. Just roll down from that website till you see this button to join our mailing list. Click that button, take your first and last name and your email address. That'll get you set up. You'll receive a hyperlink at that point with a copy to the ebook Portfolio Strategy. Pretty nice ebook there that I put together a little while ago. You can also use your smartphone to get onto the email address system. Just text Falcon Global, all one word, to 22828, and that'll get you on there. I don't send a lot of emails, but periodic blog articles, announcements or alerts about changes in the hedge risk level, and then the like. So obviously, if you'd like to be put on that distribution list and get that kind of content, we can take care of that. YouTube channel, obviously you should subscribe. That way you know when these are published. I'm going to scroll through the rest of this. Get to the disclaimers. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers, and note the full set of disclosures can be found at this hyperlink at the bottom of the slide. We'll see you back here for tomorrow's trading session. It should be some very interesting end of the week wrap up as the Brexit vote becomes known. And in the meantime, manage your risk, manage your portfolios in a smart way, and we'll have good trading all around.